Good morning, traders, and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Wednesday, November 29th, and I'm Michael Boutros. Good to be here with you guys this morning. We just got the release of U.S. GDP, the second read for the third quarter, revised up to 3.3%. We were expecting up a revision from 3.0 to 3.2. So it did come in stronger than expected to 3.3. Also, a quick side note, you did see that core PCE, the Fed's preferred gauge on inflation, personal consumption expenditure, also uptaking to 1.4%. That was unexpected. We were expecting to see a hold there at 1.3. So could continue to offer some lift here for the greenback. Nothing really major, but certainly some positive data flow here from the United States. Good to be with you guys here this morning. Eman, Mark, Peter, Tom, great to see everyone in the room. On the menu for today, there are a lot of things, moving parts here. So real quick for the list, we got the DXY, the sterling and sterling yen, both which made really nice reversals off of key support levels yesterday. We highlighted that in the update. Also dollar CAD breaking through resistance. So I thought we were going to see a hold. As I said last night, there was really no trade there for me, but it's important to kind of track this thing as we continue to break some resistance levels here. So we'll take a look at dollar CAD and where that leaves us. Kiwi dollar also reversing nicely off resistance yesterday, still within that channel, but we're looking to see a break to the downside. Euro dollar, Aussie dollar, dollar yen. We'll take a look at the update from Sunday on pound Aussie, also in play here, breaking resistance. And a quick update on crude prices as we continue to head into Vienna, which is on tap tomorrow with the OPEC meeting. I mean, it's a pretty big, typically it would be a pretty big event risk, but there's a large expectations that we are going to see them. I went over this yesterday, the extension of these measures to cut output. They are expecting them to be pushed out basically into March of next year. So we'll take a look at crude prices. We're kind of just sitting on support. I do think you can possibly see a move lower here. Broader picture still looks constructive from the technical standpoint. Hey, man, great to see you. He says, hello, Michael. Can we have Kiwi yen? Sure. Let me add that to the list. I haven't looked at Kiwi yen over the last couple of days, but sure, yeah, we'll take a look. It's pretty, man. All right. Aurelian, Gary, Kevin, great to see you guys in the room. Mark. So, as always, feel free to throw any other questions or trade setups that you want to review anytime throughout the session. Till then, let's dive right in. So, DXY. Here's what we looked like yesterday. You know, we started the week on Sunday highlighting that we basically were opening at support. A little bit lower, had the 92.59, 618 retracement. You also had channel support there. You got that dip break lower, you know, early in the week, and certainly the rebound is what we were tracking yesterday. So nothing changes. On Sunday's update, we highlighted 93.51 as sort of our near-term bearish invalidation. It was actually 93.48. Still comfortable with that level. You're basically looking at this on the weekly chart. You have the the daily chart. You have the 100-day moving average, a basic 38.2 retracement of the near-term decline, long-term former median line, former support turned resistance, okay? And within the confines of just this near-term decline, obviously basic channel resistance is right there as well. So we're still making a run on that level. And as I said last night, I'm basically looking for some near-term signals for exhaustion here ahead of 93.51. If our interpretation is correct, and this thing is going to continue lower. Now remember, take a step back, break it down to basics. We broke channel support. We tested it as resistance. We extended down to a 618 retracement. We're simply playing the recovery. If our broader focus is still to remain lower, if this initial decline has juice still, you know, we'd want to see price essentially hold below the upper parallel here. So that's the focus for me. As I said, we just got that release of GDP, so I'm not surprised to see this thing push higher. Is helping some of the other setups that we're watching, obviously on Kiwi dollar. We'll take a look at that in a moment. But watch for near-term resistance here, especially heading into the U.S. Open. We got the U.S. event risk out of the way for the morning, but later this afternoon, 2 p.m., don't forget, we do get the release of the Fed's Beige Book. And obviously, again, that's just a basic updated assessment of the Fed's 12 districts as it pertains to growth, employment, inflation, and the like. So, you know, barring anything really outstanding coming out of those, event risk for the U.S. is pretty much cleared out after this. So Decent print on GDP, decent print on PCE. Obviously, inflation has been the laggard of the Fed's dual mandate, and that's sort of been the focus. So I'm sure this is going to be a welcomed upward revision that we've seen today. Any questions on the index moving forward from here? We have a lot to cover today, so I don't want to spend too much time on this. Basic story remains unchanged. Look for some sort of return, near-term resistance, exhaustion as we head into 93.50, and that's where I'd like to see this thing hold. Okay, next up on tap was pound. What a day for the pound. And if you can hear the smile on my face, it's well granted. We've been waiting for this for a while. Obviously, you'll hear the fundamental guys running out and saying this was due to the some sort of announcement that there's been a breakthrough with some negotiations as far as the Brexit's concerned, but irrespective, price responded exactly where we wanted to see respond. And here we are. Not too long ago, we were talking about a possible break of key support, putting this thing in oblivion. Essentially, this was a major long-term structure that we've been following. Again, I'll bring your attention to the weekly charts, which we've been tracking very closely on the pound. And it just brings a smile on my face every time I see this because it's just so clean. And like I said, not too long ago, we were talking about disaster with a possible break below 30.36. Now we're talking about the 2017 high week close. The high week, high day close comes in at 34.94. Still like that objective. The immediate advance, as I noted last night, we are heading into resistance right here. Okay, we have basic considerations from a Fibonacci standpoint, basic 618 retracement of the decline, basic channel support resistance, and I'll bring your attention to this was sort of a nice find yesterday. Once we registered that low, a basic trendline support off the lows, if you took a parallel off that, off of these highs, perfect touch, perfect touch, perfect touch. And that converges on that 618 into trade today. And that's why we noted yesterday, look, finally some clarity. Love the bull side of the trade. I'd rather be buying dips, but at the end of the day, 34.17 is the first level you need to respect. Really, to mark resumption, okay, of the broader uptrend. And obviously, I don't think anyone's going to argue right now. We're still within this broader uptrend. Really, to mark resumption, we do need to see a pop above that high week, high day close. 50% retracement gives us a range of 34.82 to 34.95. So that's really the breach that we need to see to mark resumption of the broader uptrend. Such a scenario, you'd basically be looking for a run right back into the Brexit gap. That's 36.75. The median line converges there basically into the open of December trade. So first things first, the immediate upside bias here is at risk below 34.17 heading into the U.S. trade session. I'd be looking again to reestablish any long exposure on a decent pullback. Yesterday we raised our bearish invalidation level from 31.27 to 32.16. Recall that was last week's open, and we turned just pips from that. Okay, so I'm pretty comfortable leaving our broader bullish invalidation or raising it to this level at this point. If we kind of clear yesterday's lows, you're risking a dump back into this key support, and that's the bullish invalidation for the broader uptrend, okay, off of last year's lows. So the levels are super clear. If you're holding long exposure, I peeled off most of it at 34.17. If we get a pullback again, look for initial 33.38, okay, as a possible entry. Ideally, November open holds a support. I don't even think you get this deep, but if you do, both areas of interest, again, key resistance right now, 34.82, 34.95 is really what we need to breach, as I noted, to mark resumption of the broader uptrend. But heading into the U.S. trade session right now, we'll be looking for a little bit of a pullback off that 34.18, 34.17 level. But just super clean, guys. I mean, outstanding. Finally, took some patience here, but finally started to pan out. Okay, here's what we looked like last night. Again, there's that near-term resistance target we just tagged. Use some caution here. Let this thing reset a little bit, but it still remains constructive. All right, pound. Any questions on the sterling? All right. The other one that we wanted to just give you an update on was pound yen. That's another one that we highlighted earlier in the week, back on the 21st, or last week, I should say. And if you guys recall, if you remember that update, it's going to show you where we were. we were talking about this key support right here, and that was 147.68 to 147.86. And, the basic or the bottom line, I always like to drop a bottom line for you guys, just to give you a broad picture of what I'm looking at, is we were looking for the pullback, but we're looking for prices to stabilize above this week's low, which was that region that we just noted. So fast forward to last night, and you saw that that break saw a quick spill, tagged a perfect 100% extension. So if this is just a correctionary move off the high, that's exactly where you'd want to find support. The reversal taking us right back into the confines of the broader ascending formation, and an objective breach of not only the weekly opening range highs, but also basic channel resistance of a 3-point touch, 1 point, 2 point, 3 point confirms. So you got the break of both of those with this move yesterday. Initial targets 149.46, secondary target 150.04, and we've both basically taken those out at this point. Here's what pound yen looks like right now. We ripped higher and continue to play an overnight trade. You now want to bring up your near-term support and bearish invalidation from down here, basically up to the trendline confluence that we just broke through. So former channel resistance, you'd want to see that hold as support on a pullback. And again, the broader uptrend, that lower parallel, which had us looking higher to begin with, converges on that region right here. Add to that, guys, basic opening range high for the week. So the levels, again, here, just as clean as sterling, a big swinging market, let me just say it that way. So obviously a larger ATR for those of you who are not very, who haven't been on board with this strategy for too long, or if you're just getting your feet wet, just make sure you're always mindful of the ATR, the average true range. Pound yen is notorious, a larger swinging trade. So a little bit, not for the faint of heart, but certainly I love the move. I love the move, and I love the clarity here. So want to remain constructive, basically while above like 148.65, 148.86, that 20 pip region right here. Top side break beyond here, when I was noting in last night's update, 151.20s is basically going to line up with a basic trendline resistance off the September high. Now, it's only a 2-point touch, so you don't want to put too much emphasis on it, but that would be the next sort of initial level I'd be looking for. Really, the breach that you need to see is above here. Okay, that's the basic and objective opening range highs for the month. There's a 38.2 retracement. This is a long-standing 38.2 retracement. Take you back to the daily chart to show you that. From the decline off the highs that you made in 2015. Okay. And you have the median line there. Okay, the 50 line for the current operative slope. That converges right there as well. Good morning, Michael. Late again, says DA. No worries, DA. Always great to see you in the room. We just went over DXY pound, and this is our third one, pound yen. Any questions on pound yen or pound? Love them. Finally getting that topside pop. The haters were going to hate, but the picture still looked constructive. We don't want to get too excited until we get those breaks, like I said, specifically here, 151.95 to mark resumption of the broader uptrend in pound dollar. Specifically on that trade, it needs to be that 34.95 level to mark resumption of the broader uptrend. Both look pretty healthy, though, on the approach. All right. I guess I'll take a quick segue, guys, into pound Aussie from earlier in the week, just to cover up the pound crosses. So this will be number 4 for today. We went over this on the Sunday update, and in my view, again, just my humble opinion, the play here was sort of to hedge any long sterling exposure. I noted this weekly chart for you guys, which showed the median line coming off the 2016 lows right here. So just from a basic objective structural standpoint, you'd be looking for a little bit of a kickback from here, momentum heading into 70. Kind of looked like it was vulnerable, right? Highlight the daily chart. You also had the high day close for the year and a 38.2 basic retracement from the decline. Both of those converged on that same median line. And again, sort of a hedge for some of the sterling long positions that I've been favoring, specifically the ones we just went over. Pound Aussie, I think, for me, was kind of the one to look lower if we were going to get a kickback in the pound. And it was just against that basic key resistance region. Here's what the weekly opening range looked like, or here's what the weekly open, I should say, looked like. And 176 was sort of the line in the sand. Ideally, I wanted to see if I can get an entry for the long side down here. You know, run back into the November open. Remember, objectively, this thing broke the monthly opening range last week, or earlier in the month, I should say. This was previous. So you look for that late month high into the November close, right? But we were right into resistance. I wanted to see a pullback into that level to get long. So the initial focus was on a pull lower to try to get into the November open before breaching higher. Obviously 78, sort of our initial targets on the upside. If we do break, again, another pair that gives you a larger ATR, you got to pull back not quite that deep. And here we are breaching the highs. Here's what Pound Oz looks like now. If I can find it, Pound Oz. Okay. So there was the pullback, and you can see it's kind of annoying because you just missed it. The low actually registered at, what was it, 173.63. We were looking for 173.46, so you didn't quite get that low. Again, the reversal, taking out the objective weekly opening range highs. High day close came in at 75.61, and again, that 76 level is given out. So 178's on tap, guys. The only thing I would highlight to you right now, if you're holding this position, is just this 50 line. I don't want to stress it. The slope has been pretty decent. So if you take a push right into the highs that we made back here in the open of November, you know, you could see an interruption here near term. I wouldn't necessarily think it'd cap the play just because of the reversal and the strength and the magnitude of it. And I do think Aussie has further down to go in and of itself. So I want to stay constructive here. Okay, just wanted to highlight that slope for you right now. But essentially, you're looking for 78 on the stretch to the upside. The upper parallel for the broader slope converges way up here at 180. So plenty of room, plenty of room. And again, this is a pretty significant break. Here's the daily chart. Confluence region, what do we always say when we see these breaks? We want to see acceleration on the upside. And that's exactly what we saw. And it gives you further, you know, conviction on those plays. So looks pretty good. I think there's plenty of upside here. You know, longer term, heading to, you know, fourth quarter, maybe Q1 of next year, 8160 is not outside the realm possibility, guys. Big level, 50% retrace, 1618 extension, median line resistance, all up here. Let's not kick the can so far ahead, but certainly, you know, the potential is there. Now, I would want to curb my appetite on it just because I think Aussie doesn't have all that much further to go, although there is further downside, which we'll go over in a moment. But a Pound Oz, stay constructive here. Questions on any of the sterling crosses at this point? Went over pound dollar, pound yen, and pound Oz. Kevin says, yesterday in the webinar you mentioned you were no longer aggressively using trigger breaks for your trading. Can you explain why you no longer are using them? Kevin, I don't want to, you know, dissuade you from using them. My concern with teaching that strategy over the last, I don't know, 10 years is just, you know, clients tend to rely too heavily on them, and you sort of start to lean on it as sort of an end-all. So Kevin, maybe I should amend that. I'm just not as heavily using it. It's something I always still consider. It's been a part of my strategy for years. But you know, as you zoom out on the longer-term charts, Kevin, we want to always remember that the oscillator means nothing until the candle breaks. So when I'm presenting, you know, a 240-minute chart or a 4-hour, 2-hour, it's kind of a delayed response to wait for that trigger break to actually trigger the trade. So the time those triggers will come out to be most useful is still going to be in the real tighter time frames. So Kevin, you know, I have no problem with you utilizing that kind of play. Certainly on the near-term time frame at 30-minute, really close is even better, like 15-minute charts. These are triggers we're fine. You know, I'm no problem using this kind of a trigger break here to get on the long side against the lows, playing your moves. But on a 240, on the 120-minute charts, Kevin, we have to wait for that candle close to validate where the signal is, and that's going to kind of leave you in a disadvantage if you wait for it. Does that make sense, Kevin? I'm assuming you've been following us for a while because that's, you know, something we were very heavy on back in the day, and certainly I don't want to discredit it. I just don't want you to put so much emphasis on it. It should only be that added visual trigger on a trade that you're already looking at. Make sense? He says, okay, got it. I'll just use them in the shorter time frame. Yeah, that's your butter zone, man. That's where you want to utilize that kind of that kind of analysis. All right, good question. Anything else on the pound crosses? Going once, going twice, sold. Let's go to dollar CAD. That's going to be number 5 on this session. We were wrong. It broke resistance. Bottom line, we were looking for that hold. I noted this, back again on the 26th. So back on the Sunday update, we were talking about this being the line in the sand. Okay, 128.21. He had a 618 retracement. We responded to that earlier in the month. He had basic trendline resistance, and former trendline or channel support turned resistance. So if we break this zone, sayonara. I kind of don't want to be anywhere near trying to play this. And remember these expansionary ranges, as I noted in the webinar earlier in the week, my least favorite plays. So fast forward to last night, I kind of just wanted to highlight that again, we were at that region, we rallied right into it. And if we were going to see a hold, if the interpretation is correct, and we did see that break of channel support, I want to see price respect this resistance. So here we are heading into the US Open, and we're popping through. So what do? Nothing. Sit on your hands, don't touch it. I think there's plenty of opportunity elsewhere. I don't know what to do with this at all right now, guys, but levels to keep in mind if you are in play on this: the high day close and the monthly open come in right at 128.86 on the Q. So that's sort of the first level that you'd start to look for. If we breach through this, it changes the picture, but for me, this is kind of neutral zone. This is nowhere. You don't want to be messing with this at these levels. Let's just say that. I guess we should take a look at the weekly chart for dollar CAD. Is sort of also where this lack of confidence stems from. We're still in this key range, 129.27. If we clear the highs, you still have the 52-week moving average there at the 130 handle, and momentum is kind of just doing nothing. So I don't really have a strong opinion on this. I just wanted to present it to you because we've been tracking it. And as it stands right now, if you put a gun to my head, I would say wait for this thing to rally a little higher. Look for a reaction near 128.80, 129.27. But unless we make it back below the August highs at 127.78, really wouldn't be interested in doing anything on the short side here. Now the good news is that heading into Vienna tomorrow with what will happen with crude prices, if we do get some volatility there, obviously that could offer some clarity here on CAD if we do get an impact on or a big swing on crude prices. But yeah, as it stands right now, I just don't have a play on this. So let's go neutral on dollar CAD. Look at 128.86, 129.27 for a possible reaction. If we see prices back below 127.78, that's when I would start to get back interested on this one. So not really much excitement here on Loonie, more of a study as we continue to track the anatomy of this advance here. Questions on CAD? All right, next up is Kiwi. Okay, here's what Kiwi looks like from last night's update. So again, one that we were following since Sunday. Here's what Kiwi looked like earlier in the week. Kind of gave you the whole breakdown, starting with the weekly charts, ending that key support that we've been watching and tracking near 68.27. The emphasis is still on a break below that. We started out the week noting that there was strong daily divergence into the lows and a failure below the 2016, 2017 low day close and opens certainly left the risk for a move higher before we start to sell off again. Even looking at the near-term charts for the Kiwi continued to highlight that risk. So we were looking for a move higher. We talked about 69.36 and the 70 handle, both being areas of interest where we would start to look for entries on the short side. Okay, so the basic focus was to look for an exhaustion rally. Well, near-term price action offered us further guidance as we get deeper into the week with this channel. Basic channel off the low or basic channel off the high, extending it off the highs we made last week was literally a perfect two-point touch, and that slope converged further on the 69.36 level with downslope resistance. So held pretty good. We talked about this yesterday in the webinar, and that was kind of initial region I was looking for. Momentum bounced right off 70. The pullback was looking for channel support and overnight trade, and as I said, really 68.37 is the break you need to see, the October low day close, to sort of validate the break of this channel. put us on track for 68.30. And again, that's the long-term trendline support, or lateral support that we've been following since the start of the year, essentially. Anyway, here's what it looks like now. We made it right off that channel resistance, came to channel support last night, rallied again. Failure ahead of that median line continues to look good. Here's the pullback still sitting on that channel. So nothing's changed. Still like it lower. Bearish invalidation for the broader downtrend, still remains up here. Downside targets on a break remain unchanged. 68.27, depending on where we are on time. We'd be looking at that median line, but really the 618 down to 67.40 should be a little bit more critical. So looking pretty good on the Kiwi reversal off resistance. Kiwi questions, going once, going twice. That is New Zealand dollar. Okay, going back to Monday's update. Here's what Euro looks like. So we were talking about the break of support. We got the break of support. I do not want to get excited on the downside because we're looking for this support bounce or this drop to give us a little bit better of a long entry for the broader trend. Here's what Euro looked like last night. Again, earlier last week, I'll bring your attention to where we were looking at this thing on the rip higher. We basically came into this channel resistance and whipped lower. That's all we're doing. So as it stands right now, earlier in the week, we were talking about this support at 118.85. You had a huge confluence there of a couple of different median lines for both the initial ascending approach, the longer term median line in blue there, that's what you see here in the daily chart, and you had a basic 618 retracement, 118.86. A break below that would have risked decline all the way down into 1800, 1805, and that's where I'm looking for this thing to find a little bit more support. Now, as far as bullish, invalidation, I'm going to leave it down here still, which is the 100-day moving average, would necessitate a break again of the longer-term median line there, and that's kind of something that would shift my mind, where we are in the euro in general. But as it stands right now, here's what the near-term chart looks like. We're simply coming off channel resistance, looking for some support heading into the 18 handle. And that's the level I want to see a reaction at. If we break lower from there, kind of changes the near-term picture. You risk a drop all the way back into former trendline resistance or channel resistance. That takes you 1725, even lower into 1700s. But as it stands right now, this is something I do want to see hold near-term in euro, if our interpretation is correct. And remember, the charts are kind of messy because we've been, flirting. Here's the daily chart with that lower parallel. Everything's been so clean. We've been inside this formation all year long. And when we broke below, it looked scary. We hit that first head and shoulders target at 115.53. The rebound, if the break was legit, you'd expect to see this resistance hold. And certainly once it pulled back and tagged again former channel resistance as support, put us back into this ascending channel or ascending median line. Now what do? Right? It's looking a little messy. So I'll grant this a little bit lower down near 1800, but I do want to start to see this thing level off on a pullback here near term. Again, the euro picture on the weekly doesn't really give us much to play with here, but further highlights that uptrend median line support at this point. Again, basically just below 1800. So precarious position here for the euro, in my opinion, but we're in the trend till we're not. I hate the cliches, but here's basic trend line support, convergence with that 38.2. Look for initial support near 118. Any questions on the euro or where we stand right now? Okay. Aussie. Here's Aussie dollar. So this thing finally made the break We're looking for either, and this is something I've been held to for a while now. It's been a basic move. We need to see a breach above 76.70 to confirm reversal of a broader massive break of support, or a dip into 75, 74.98 to be exact. You have a fib consideration there at 786. You have a basic trendline support extending off the yearly lows from last year. And that's sort of an area of which, if you break, would shift the broader picture for Aussie, keeping it as objective as we can. Basic trendline support, confluence region with that 50% on the larger scale for this weekly chart on Aussie, highlight 74.76. This is the broader bullish invalidation level. Weekly close below that would certainly change the bigger, larger picture here for Aussie. Okay, but as it stands right now, all things held constant, I'd actually be looking for exhaustion for long entries down here. The immediate focus, what we're looking for right now, is lower. Okay, here's Aussie on the daily chart. Remember, as objective as we can stay, right? An objective break of the monthly opening range. As you guys remember, all my daily charts will always denote the monthly open with a marker. There's your monthly open. You set a high, you set a low. You hold below that 200-day moving average is the new kind of range highs. You test the lows multiple times. The break that we saw here and close below on November 13th shifts the focus lower, looking for a late November low. We stretched lower. We turned an area I didn't like where we turned from because I didn't have anything major there. I mean, he had some swing lows, but nothing really, in my opinion, that was so hardcore. But he got an outside day reversal off the lows. Momentum came right off 30. All right, you got to look for that recovery. Guess what? The recovery came right into the opening range lows for the month, held, and we're moving lower. Again, 75 on the weekly chart, 74.76. This region here continued to be highlighted as support. Basic trend line off that 2016 lows, 786 retracement. You know, that's where you'd want to see a little bit more of a concerted support hold if the broader uptrend is to remain intact. And again, the expectation for that near-term decline in the Aussie, one of the contributing factors to why I still like that pound Aus long. We broke a big resistance level on pound Aussie. If Aussie is going to continue to soften here, even in the near term, for another 100 pips to the downside, or not even, another 60, 70 pips to the downside, should continue to offer some support for that pound Aussie on the long. Any questions on Aussie dollar? Now, again, across all the dollar pairs, guys, we still do have the beige book, like I said, later today, heading at the end of the week. For the CAD, don't forget you have a big number of event risk items on Friday with CAD employment data and CAD GDP numbers. So certainly, still definitely some event risk to look forward to as far as playing in this dollar arena, let's call it. Also keep in mind, guys, the tax talks are going to continue to waver market price action as well. Eman saying the abomination dollar yen is struggling around 112 handle. What does that mean? Let's take a look, Eman. We've been tracking dollar yen, and actually that's up on the list next anyway. So euro we did, Aussie was number 8, dollar yen will be number 9. Here's dollar yen. So, the weekly for dollar yen, I don't want to bore you with this. You guys have all seen this, but just the only thing I wanted to continue to highlight is the 100, okay, the long-term 200-week moving average. You'll often hear it's called the long-term moving average, but that and the 52-week moving average, just an objective yearly average, converging still right here, 112.36 into 112, and that's basically what we're testing right now. So I wouldn't be too surprised, man, to see some kickback near term. What does it mean? Nothing, in my humble opinion. We're still in the broader range. The near-term picture did highlight that support, and we talked about that earlier in the week as we turn just pips ahead of the gap uncovered close that we made back here in September. That's backed by some former swing highs, 110.67. Excuse me. Here's what dollar yen looked like. Earlier in the week. We simply came off that support, and as we were talking and writing this update, we were talking about the fact that we switched off that pretty hard on building divergence, momentum. Obviously, price action making a lower low on a closed basis, the oscillator making a higher low Again, a weak signal because it is below 30, but a signal nonetheless. Coming to support, initial resistance 111.65, 111.90, bearish invalidation 112.48. So this is the level that would put me on the bullish front, Eman. I don't want to advocate necessarily getting long, but necessarily I'd be looking for the advance to give us a better short entry. And with all those things stacked up, excuse me, basic trendline resistance or channel resistance, the daily chart or the weekly chart highlighting, both of those median lines or both of those moving averages, excuse me, again, near 112.36, 112. I think it's got a little bit more juice to the upside, but I'd be looking for a fizzle out ahead of 112.48 if this downtrend is going to remain intact. We don't call it the abomination for no reason, guys. It's tricky. I like the long off this, but nothing beyond 111.90. So I'm flat here. You know what I mean? If we get a tag into the upper parallel and it kind of holds as resistance, a break back below 111.90 would be a little bit more assertive as far as holding the downward trajectory. But keep in mind, we only have 2 tags of that trend line, which is why I'm not like super confident of it. Yes, a parallel of it, saw really nice touches here, but it's not the strongest structure. Let's just say that. And again, you have dollar yen is a very strong reactor to U.S. data and incoming U.S. Metrics anyway. So with the Fed's beige book on tap, hey, maybe we'll get some clarity here. But all things held constant, I'm looking for a little bit of a push higher here to start fizzling out near that upper parallel. Eman, does that make sense? Got you, Mike. Thanks. Yeah, you're more than welcome. So that's dollar yen. No change to any of the levels that were highlighted earlier in the week. We're basically just walking right through them. See if we can't get a fizzle out at 112.48. And the other thing I was looking at yesterday, guys, I didn't want to put it on the chart because I thought it was just going to get too cluttered, was a basic retracement. So one thing I wanted to highlight is, first of all, the level that we were highlighting anyway, near 113.25, is the exact 618. But if you start to bring in some basic fib considerations, a 38.2 is ahead of that 12.48 level. Another reason I'd like to see this sort of region hold is resistance. So looks pretty decent, but we'll have to see if this can't give us another drift higher. Good idea, Eman. Good idea. A lot of times I like to trade, especially in a position like this. So Eman, by the way, just I'm talking like just me and her. She's saying we'll stay away till we have the beige book release. A lot of times out in a position like this, if the beige book offers that last stretch, that's the opportunity. So yeah, I think this one's prudent a little bit to wait on as well. Besides, we have so many other plays, and the sterling crosses are of great interest. The euros have been interest here as we head lower. Aussie, obviously, we're looking for that to settle. There's a lot of other plays at hand. Eman, I'll take a look at the Kiwi yen for you, which is something you want to take a look at before we take a look at crude. That'll be number 10. Crude will be 11. But Kiwi yen, let's see what that looks like. Okay, so here's the first time we look at it this week, obviously. So you'd want to see a reaction either right here or here. I think these are both areas of which you'd want to see resistance hold for another push lower. Look, the problem here with this, Eman, is that this is very similar to the Kiwi dollar in that it's heading towards the yearly lows, a huge marker in price. And the emphasis is on a break of this key region we were highlighting. We never actually got into it. Within the confines of this region also, you have the yearly low day close. So on the reversal here, okay, this is an objective monthly open. We came into resistance. This is when we were covering this closely. If you guys recall, we got super bearish right up here. Basic 4-point trigger or 4-point support. 1, 2, 3, 4. Break saw acceleration. You'd expect resistance. Okay? Basic parallel off the highs. Resistance, again, converged right on that region. Former swing lows. We got really bearish up here. Once we got that reversal day candle and broke the lows of the range there, kind of opened things up. A break below the monthly open and the monthly opening range lows really further asserted the downside bias on the way up. Amen. That's where I'd want to see resistance. So 77.38, essentially into the 77 level, 40 pip range here, of which I'd start to look for some exhaustion if this is going to hold. Now, the broader picture, right? So even if we do hold here, this is still a region of key support that you need to get through. We're no longer online with slope, but basic yearly lows, low year close, or low day close, excuse me, for the year. That's still key support. So on the broader scale, Kiwi yen on the daily, right? Let's zoom in and see what the intraday looks like. All right, so I'm going to marker up the weekly open here on the intraday charts because it's not highlighted. So give me 1 second. Oops. So here's what I would be working with on the intraday. Eman, feel free to take a snapshot of this if you'd like. Again, for anyone who's new in the room here today, obviously first, welcome. It's great to see you on board. But there is a camera button on the top of your screen there. If you need to take a screenshot of any of the charts that we're presenting for future reference, feel free to do that. But this is what I'd be looking at. And again, further highlights those two regions we were talking about. I leave, well, let me do this. Hold on 1 sec. All right. I just wanted to clean that up a little bit. So this is a little bit more of the amended levels I'd be working with. Sort of a last spike, especially if it gives us a divergence signal into that region, I'd definitely be interested in trying to play that. Just its basic objective, former swing lows and basic 786 retracement, channel resistance. But on a topside pop, really, November open is what I want to see hold. Both areas of interest for entry. I'm going to leave the broader bearish invalidation, or the thing that would put me bullish, 78.21 pop. Okay, if we clear a 618 retracement just of the monthly range, which is this is exactly what this is, in my mind, that would validate a break of this descending formation for sure. Make sense? Iman says, you taught us to be patient, Michael. Appreciate it. Super as always. Appreciate that, Iman. Thanks for bringing it up. Yeah, it's an interesting setup. My concern is that you're kind of bearish Kiwi and yen, so like it kind of puts this one, at least near term, right? Dollar yen moving up is a yen bearish move. So I wouldn't be too surprised if you see a little bit more lateral sideways action here. Ultimately, 77.40 and 77.77 are still sort of levels I'd be looking for to fade strength. We'll see how that pans out, but not bad on Kiwi. And all right, last but not least, or at least on the list for today that I had, as always, guys, feel free to throw out any questions or trade setups you want to review, but crude prices ahead of tomorrow's Vienna meeting is going to be pretty, market central tomorrow. So we've been covering crude prices since the Sunday update. Here's what it'll look like on the broader scale. We did a whole breakdown on this, both from the weekly front, again, highlighting a possibility for some resistance here as we came into those targets on the upside. Daily chart had it even clear. A basic 1618 extension from the advance off the yearly lows converged on a basic median line. Nothing fancy, okay? And it left this thing kind of vulnerable heading into the start of the week. Intraday charts look like this. Again, highlighting that resistance region. Momentum was an overbought, so we were suggesting again, if we were to see a crack below 70, that would be a little bit more of a conviction, near-term sort of pullback, exhaustion play. So you got the break below 70 right on the open of the week. The pullback took out 57.96. Yesterday in the webinar, we added that 618 extension that gave us 57.42, and that was the exact low that we've been sitting on ever since. So that extension also now validates 100% extension down at the next target that we were looking at, which is 56.87. So the levels essentially remain unchanged. At this point, you're just coming into basic slope, or the 50 line rather, which is offering some support here for crude prices. So here's what it looks like on the live charts now for the 240-minute. If you're wondering where this extension came from, you really don't see it clear until you get into the deeper time frames. And here's what it looks like on the 60-minute. Basic extension from the decline off the high. So boom, boom, boom. Again, on the 4-hour, you can't even see this really because it happened so quick, but that gave us 57.42, bottom there. Again, on the next downside approach, this is divergence. So I just want to highlight that. Always looking at this from a close basis. You wouldn't tell it by looking at the wicks, but certainly when you bring this to a close, price action making a lower low, the oscillator making a higher low. So I don't want to get anyone excited about taking a position ahead of tomorrow's meeting per se, and we will review this again tomorrow in the morning webinar. But watch it here. Remember, the broader picture still remains constructive. We only wanted to play the pullback off resistance. We got that pullback. How deep it gets, 57.42 and 56.86 are both levels that we've been watching. So keep your eye on these prices, specifically here in crude, as you get into tomorrow's highly anticipated OPEC meeting. Also keep in mind, topside break at 59, you still have to deal with 60. And that was the initial target, the broader picture of a little bit more of a critical resistance range. A 618 extension, this is from the advance off the lows I think that we made in 2015, if I'm not mistaken. No, 2016. Yeah, last year's low. So within the confines of this formation that we've been following. And a basic 38.2 retracement from the declines off the highs that you made in 2011. So good clean areas of resistance. And again, I think it's a bigger level at the 60 handle, just higher in crude prices. Speaking of triggers, as Kevin was asking about earlier in the session, here's one, Kevin, I would be looking at. On a daily close basis, you can see there's been a couple of things that are concerning for me. In fact, on that last rally, one of the reasons that we turned bearish early in the week, or I gave you that highlight early on Sunday, was just because of the fact that we had made a lower high on the weekly, or on the daily charts here, excuse me, as price action had obviously making a higher high. So a divergence signal like that into resistance is worth a shot. But on a close basis, if we were, to knock out, obviously we had a spill here once, but to knock out that trend line on a close basis, and a move below this would certainly shift a broader focus for a larger recovery in crude. So these triggers can still be helpful. I just don't stress using them on an entry-exit basis anymore as much as I used to. At least not on the longer time frames, but on the shorter time frames works pretty well still. All right. And that's everything I have on the list, guys. Feel free to throw out any last questions or trade setups you'd like to review. some things that you'll see highlighted on the headlines today and all the news publications is going to be the radical rally that we're seeing here in the crypto block. Still, look, this is just sheer, and I've been saying that for a while now, but I still think it's true. This is just a sheer emotion trade here. There's no rhyme or reason for any levels beyond this region. So if you hold them, got them. If you're trying to do something on a trade basis, this is not not on the menu. Okay, not on the menu. Ethereum, which is a trade I've been following a lot closer because I did think that had a lot of room to play for the upside. That took out the last target here today. So you probably see me highlight this trade a lot on Daily FX. It's a big market pleaser. A lot of people like reading about it. But as far as actually trading it, guys, at this point, if you're not long, there's no risk management here for me to even suggest getting into a long position. So just note that this was the last sort of initial target that we looked for on Ethereum prices. So could get a little hairy here around 500. But topside break from here. Next objective measured move takes into 622. So a lot of room to the upside still. Last but not least, a quick review just on gold prices because I know a lot of you follow those. Not really exciting. Not really anything to talk home about, which is why you haven't heard me or Jamie really be stressing this too much. As of late, the near-term picture is ugly as hell. I was looking for a stretch into 1309 once we broke that 1294 region. This changes things. Now, obviously, we're just checking the objective weekly opening range low, so we haven't necessarily made a break yet. If we do close below that or push below that 100-day moving average again, your risk is a spill all the way back into 1260. So there's just not a trade here either yet. I think we need to be a little bit more patient on gold prices. Could be a decent reactor to the beige book later today. I don't expect it necessarily to charge that much, but something to keep an eye on. Specifically with the back of the PCE numbers that we got that were pretty tight today with a nice little uptick to 1.4%. Remember, the Fed's goal is 2%, so we're still well shy of that, but heading in the right direction. If you were to get a really rosy, upbeat Fed beige book today, could offer some further fuel to the downside here as gold catches a bit, but not necessarily a play I'd be looking at for initial intraday positioning just yet. All right, guys, so if there are no other questions, whoops, I will wrap it up here. As always, reminder, I'll be back on board tomorrow. Later today, Jamie will be up with his midweek strategy webinar in just a few hours, so definitely stay tuned for that for a nice review of some of the longer-term swing trades that we've been following and a broader picture of what's going on. I'll be back on board again, like I said, tomorrow morning, 8:30 to wrap up the week and give you a nice little preview before we close things out. Till then, best of luck, guys, and I will see you guys tomorrow. Cheers.